Good evening, everyone. This is Financial Literacy 101. And today, or rather this evening, we're going to talk about our credit scores. We're going to break down these credit scores. We want to see why we can't have access to wealth using our credit as a tool in order to get great credit, in order to get business credit, in order to start a business off somebody else's money, the same way people have been doing it for a very, very long time, especially white people have been doing it for a very long time, using access to credit. And that's the one thing in our community that we need to get ourselves together in order to move the goalposts to start making some really good money. Well, one of the first things you might be asking yourself, you're probably asking yourself, what is your credit score? And basically your credit score tells lenders, okay, people who are going to give you loans, your credit worthiness, basically how likely you are to pay back a loan based on your credit history. And what you guys need to understand is that your FICO score, there's two types of scores. You have your FICO score, and then you also have your Vantage 4.0 score. Now, the FICO score was an independent company that came together, developed a mechanism, a system in order to tell people who are lending people money how worthy this person is, how likely this person is to pay back the money. Okay. And this became a very big thing because right now you can't even move financially without having a decent credit score unless you are already rich or wealthy by some other means than using credit as a tool for you to even have access to wealth. Okay. So you have your FICO score, then you have your Vantage 3.0/4.0 score. The Vantage score was actually developed by the three credit agencies. That's Experian, TransUnion, and Equifax. Okay. And I'm gonna break down the three. Now, when we come to FICO score, the FICO score have 5 sectors. Okay. 5 parts that make up your entitled credit score. Okay. So when it comes to the 5 categories, your payment history, the history of you paying all of your loans, credit cards, installment loans, mortgages, car, this, that, and the other, that takes up it makes up 35% of your total credit score. So when you guys get charged off debts and they delete it from your payment history, your credit history, that can hurt your score because it's 35% markup of your credit score. Then the amount that you owe, that's 30%. And this is synonymous with you shouldn't go over 30% on any of your credit cards. Okay. So the amounts owed is 30% that makes up your FICO score. Then you shouldn't go over 30% on any of your credit cards. The length of your credit history. How long have you been dealing with credit? Okay. Whether it be rental furniture, buying a vehicle, anything that you essentially buy on credit. It could be a personal loan, a business loan, a credit card. That makes up 15% of your credit score. And then new credit, okay? New credit, a new credit card, a new loan of any sort makes up 10%. And then the different types of credit you have, that makes up another 10%. So you have 35% for your payment history. You have 30% on the amount that you owe. You have 15% on your credit history. The length of your credit history, and then 10% on new credit, and then 10% on mixed credit, because you have different types of loans. You have business loan, you have installment loans, you have mortgage loan, you have credit card loans, because essentially when you're using your credit card, you don't know that's a loan. Your credit card is a loan. We just don't associate it with it, but that is a loan. Now, when it comes to the Vantage score 4.0 that was made by the 3 credit agencies, they are a little bit different because they do what's more influential. Okay, take for instance, they have it labeled as extremely influential, the total credit usage, balance, and available credit. So when you guys are going over 30% of your credit utilization on your cards, then that is extremely influential when it comes to your Vantage score. How do you get your Vantage score? You go over to Credit Karma. Those entities that do not give you your FICO score, because more times than not, you have to pay for your FICO score, okay? Then the next one, the first one was extremely influential. The second one is highly influential, and that is a credit mix and credit experience. Okay, your credit mix and your credit experience. The next one is moderately influential, and that's your payment history. Moderately influential, that is your payment history. Your next one is less influential, and that's the age of your credit history. And then the last one is less influential, is new accounts. So when you have new accounts on dealing with your FICO score is only 10%. Now they break this down very differently than FICO. FICO is on a percentage scale where this is like what's most influential of your Vantage score. Now, majority, you say, well, what system, FICO or Vantage, do I go off of? I'm going to tell you right now, you should go off your FICO score. You should most definitely go off your FICO score, because 90% of lenders use your FICO score. They absolutely positively go off your FICO score. So I'm going to say I can type this, your FICO score. Okay. That is what you should be doing. You should be using your FICO score. There should be no doubt about it that 90% of lenders use their FICO score. All right, we got Justin Ackright. He said, hey man, how's it going in Cuba? I'm not in Cuba, I'm in Rio de Janeiro. I don't know. Well, let's keep tracking on, guys, because this is good information that I believe that you guys need to understand, because we need to understand how credit scores influence the credit that's available to a person and the terms of your interest rate. So when you guys are out there shopping for car loans, shopping for mortgage rates and mortgage loans, your credit score is so influential. It decides how rich or how poor you're going to be. And what I'm simply meaning is how much money are you going to pay for that loan? See, you just don't get a $300,000 loan, right? You're like, okay, I need to pay back $300,000. No, that's not how it works. They're going to give you $300,000, but you also have to pay them for giving you that money, okay? Because they need to get something out of the deal. So you have these lenders who have secret investors who put up millions and billions of dollars just to loan to people in order to get a return on their investment. So what they say is, well, those with great credit, we're not going to hurt as much as those with less credit or worse credit scores, because when you deal with people with low credit scores, the risk is higher for an investor who wants to get a return, whereas though someone who has a high credit score, someone who has a high credit score gets the better rates. So a lot of you jump out there in the market. Oh, I want a car. I want this. I want that. And you need to get it on credit, but your credit score is in the 600s. Your credit score is a 500. I'm going to tell you right now, a good credit score that you guys should actually be looking at is 705. I know, but anywhere from 705 to 720, the research is in that you're going to get some of the best rates. You're not going to get the best rates, but you'll get some of the best rates. Does that make sense? You're not going to get the best rates, but you are going to get best rates. Now, I think it's imperative that we need to understand that the FICO score goes from 300. This is the range of the credit score. It goes from 300 to 850, okay? 300 to 850. And what FICO considers a good credit score is anywhere from 670 to 739. That's 670 to 739. And I want to let you see this, ladies and gentlemen. I think it's very, very important. Let me get this out the way. Give me 1 second. This is very, very important. I'm going to blow this up for you guys. Okay. Now, if you have less than a 580, okay, you have less than a 580, according to FICO, you have a very poor credit score. And I'm just going to read this so we get the information. Some things I need to read, some things I do not. The credit score is well below the average score of U.S. consumers and demonstrates to the lenders that the borrower may be a risk. Yes, you are very risky if you have under a 580. That's actually, unfortunately, a very horrible credit score. I'm going to give it to you direct. I'm going to give it to you in a level that you can understand. If you're going out there shopping for cars, shopping for houses, trying to open up a business with a credit score less than 580, you're going to get some of the worst rates. And some of you just not going to get any loans at all. Some of you not going to have access to credit to use as a tool so you can have access to wealth and a chance to making more money. Now, a fair credit score, as you see, is 580 to 669. This credit score is below the average score of the U.S. consumers, though many lenders will approve loans with this score. This is the range. Listen, this is the range from 580 to around 670, where you get some of the highest rates. People who are low 580, they can get loans, and they're horrible loans, but more times than not, especially in a down economy like this, you'll get turned away. But if you have fair credit, you get some of the highest. You get double-digit interest rates on your credit card loans, on your installment loans, on your revolving loans, on your mortgage loans, on your car loans, etc. Now, your good credit score is anywhere from 670, 739. But I told you, if I were you, I would be looking from a range of 705 to 720 when it comes to good. Just take my word on that, ladies and gentlemen. I've done the research. 705 to 720, that's where you want to be when it comes to good credit, okay? And it states here that this credit score is near or slightly above the average of U.S. consumers, and most lenders consider this a good score, okay? 740 to 799, very good. That's very good. This credit score is above the average of U.S. consumers and demonstrates to lenders that the borrower is very dependable. And then 800 plus is exceptional, okay? Excellent. This credit score is well above the average score of U.S. consumers and clearly demonstrate to lenders that the borrower is exceptionally low risk. Now, more times than not, you guys have to pay for your FICO score, but you can get your Advantage score totally free. Now, the difference in that, which is imperative actually to know your FICO score. Again, I go back that most lenders use your FICO score versus your Advantage score. And we need to understand that your FICO score is more likely being used when you guys are going out to buy cars, when you guys are being looked at for business loans, to be an entrepreneur, to start some sort of sole proprietorship, so on and so forth. They rarely use your Advantage score because your Advantage score is practically brand new. Excuse me. That's why when you guys go in, and some of you understand what I'm talking about. You guys go in, you want to buy a car. You was looking at Credit Karma, and you was looking at your credit score, and Credit Karma said, "Oh, you have a 710." But when they looked up your credit score for you to get a loan in order to purchase your car, they say, "No, ma'am, no, sir, you have a 680." Like, no, it said I have a 715. Well, sir, that's a different credit score rating. That's your Advantage score. Advantage score, what's your Advantage score? Again, your Advantage score was actually created by the 3 credit bureaus, okay? And that's what a lot of us not understanding, that there's 2 major credit systems out there. There's a few others, okay? I'm not going to focus on them. There's a few others out there, but a lot of people don't understand about the 2 credit scoring agencies. Now I'm going to show you something else, because I'm signing into my Navy Federal Credit Union. A lot of you who have certain bank accounts, certain credit unions, believe it or not, ladies and gentlemen, you can get your FICO score absolutely free. You can get your FICO score absolutely free, but usually it's through your bank, your credit union. If not, you're going to have to pay for it. Okay. I'm trying to get through this. I'm getting through a lot of, I don't know why this is doing this. Give me 1 second. Give me 1 second. Okay. I keep having issues. I think mainly because I'm trying to access this while I'm overseas. But what I might do is I might use my phone. Okay. I might show you guys on my phone if I can't get in. All right, let's see here. I'm still having issues. So let me go on my phone. Give me 1 second. And I'm going to show you with a bank or credit union, rather, like Navy Federal, you guys can actually get your FICO score for free. Now, some banks offer this for a nominal fee, a very, very low fee. So it's important that you guys understand the 2 differences, okay? So right now, what I'm going to do is I'm logging into my Navy Federal account, and I'm going to show you my FICO score, okay? That way you guys understand, essentially, it's going to say FICO, and it's going to give you my score. And this is updated from February the 3rd. Now, I've seen a difference of how they update your score on different platforms, whether it be a bank or a credit union or an individual entity that you're using to monitor and help you repair your credit. So right here it says FICO score base 9 of Equifax data. Okay. So this is where it is. You see how that's a FICO score there? That is your FICO score. Okay. And that's very different from your Vantage score. I'm trying to show you guys without it blurring out. That is essential. And that's from Navy Federal. And that's absolutely free. Okay. That's absolutely free. And there's other places where I can actually get my FICO score, but most platforms that I have that offers your score, like I think it's Capital One. Now my Capital One, I believe, is a Vantage score. Let me go over to Capital One very quickly. Bear with me here because I want to show you the difference. And the only way to show you the difference is show you some of my accounts. That way you totally understand. Let's see. Hopefully they let me sign in. What I should have done is I'm having issues, ladies and gentlemen. Let me see if I can do something very quickly. What I should have done before I came live is started my geo proxy. I did not start my geo proxy, so it can change my location. And I apologize for that right up front. Let me see if I can do anything very quickly so I can give you guys the information so you can see it. You know what? I go back on my phone. I'm sorry. I just go back on my phone. It's frustrating when you're overseas and you're trying to do things and you didn't set it up prior to. So that's on me. So I'm gonna go over to Capital One. I'm gonna go over to Capital One and I'm gonna show you my Capital One score. It should be different if they're working on the Vantage 4.0 score. Yeah, Capital One use CreditWise, but I do not believe they give you your FICO score, which is very, very important. And here's the thing about your Vantage score that is from different entities like Capital One. As Tanya River says, she says, hey, that's CreditWise. It may or may not be added within your FICO score, okay? So give me 1 second here. Give me 1 second. And ladies and gentlemen, we need to understand, whether it be Vantage or FICO, there are 5 sectors on both of them. So it really doesn't make a difference when it comes to that. You guys need to know all those sectors, okay? So right now I'm trying to look for this. Bear with me. I do apologize. I thought I could just pop it up as we were live here. I like to do things live so people don't think I'm pulling a fast one. Okay, so you saw my FICO score, right? It was what? It was 772. So here's my CreditWise score, which is a Vantage score. Look how it's very different. Oop, showing you some money. Look how it's very different. So my FICO score was what? 772. This is 10 points lower, but this was updated. It says new update available. Let me see my new score. Let me update it. But you see how they differ. Now, I've seen people score differ anywhere from 50 to 10 points. Now, oh, it went up 1 point. Okay, so it didn't really go up that much. Okay, so now I'm at 763 on my Vantage score. This is not my FICO score. This is my Vantage score. My FICO score is actually higher, and that's actually a good thing because, again, 90% of lenders use your FICO score, and it's very important that you understand that. Now, let me take you over to Vantage score, and I'm going to show you how these things differ and how they read, because it could be confusing of which one you are actually seeing and which one you're actually using, okay? So as we're looking at this, you see how when it comes to your FICO score, they're using percentages. And you see how they have extremely influential, and it's your total credit usage, balance, and available credit. Your next one is highly influential, is your credit mix and experience. And then thirdly, moderately influential, payment history, less influential, age of credit history. And then less influential than that is new accounts. Now, let me take you off of that very quickly and let me move over to the 5 sectors of your FICO score. And I want you to see that as well. It's very imperative that you understand the difference, because then you can start to work on your credit score in order for you to start having access to credit, which will help you start your business, that will help you have access to wealth, because people do this all the time. All right, here we go. So you see this, right? You see how this is broken down? You see how this is broken down. Now, when it came to Vantage, They said the most important influential thing is your total credit usage and balance and available credit, which is very, very different from FICO. FICO says that the most important thing, or percentage wise, is your payment history at 35%. Then it says the amount owed, okay, your credit utilization. Then thirdly, your length of credit history. You need to understand this so you can work on certain things. Then new credit. Here's the thing, ladies and gentlemen. I don't know why people do this. You have a bad credit score. You're still trying to get a new credit card. You're going to hurt your credit score even more. First and foremost, you're going to get denied. You're going to get denied, and then you're going to try to keep asking for credit cards. You're going to get denied. Then your credit score is going to drop 5, 10, 15 points. Because more times than not, when you get denied, credit or a line of credit, your credit score can drop anywhere from 2 to 5, but I've seen even 7 to 10. Okay, your credit score, because that's called a credit inquiry or a credit inquiry, however you want to pronounce it. A credit inquiry drops your credit score anywhere from 2 to 5 points, and I've seen 7 to 10. Now, when you're car shopping, there is a 14 to 20-day grace period where different lenders can keep dinging your credit history, essentially your credit report, without you taking the hit for every single lender checking on your credit score. That makes sense? So let's take, for instance, you're in the car market. You're trying to buy a car. You're like, oh, I want that BMW 5 Series. And your credit score is, let's say, 680. You know you have enough credit to get the car, but you're not going to get the best rates. But you say, you know what? I don't want to wait. And I hate that. I want you to work on your credit score first. This is just for an example. So they run your credit. They say, well, you know, we ran it with Bank of America, USAA, Wells Fargo, US Bank. All of those are hitting your credit report, but you're only going to get charged for one. You're only going to get dinged for once. So again, just using a wide scale ratio, your credit score can drop anywhere from 2 to 7. And guess what? You still didn't get the loan. So again, I tell people you should be really working on your credit score to get it over 700. I like the range from 705 to 720. Then I believe you can really start shopping around and have some wiggle room, and you get really low interest rates. Take, for instance, my Capital One card. It's at, I think it's at 3 or 4%. People are like, man, how do you get your credit card 3 or 4%? You can negotiate on your credit card interest. But here's the thing. If you understand credit cards, if you understand loans, credit cards can be used just for your rewards and points and traveling and miles and perks and rewards. I tell people over and over again, do not use your credit cards as an extension of wealth. You're going to get yourself in trouble, meaning you're using so much credit that you're using more credit per year than you actually earn per year. Where they do that at? How do you essentially do that? You're making 50 grand, but you have 60 grand credit card debt, or you have more bills at the end of your month, meaning you paid essentially your bills, but then you have more bills coming in and you're like, well, I don't have any more money. Let me use my credit card. Okay, because you're using your credit cards as an extension of money, as an extension of wealth. And who is getting rich? Not you, the credit card companies. And then some of you who, I'm just going to be real, you're not patient. You need it now. You want to floss now. You want to stunt now. And that is the issue. You have to work on those things in order to be where you want to be, in order to get what you want to get. Because a lot of you say, you know what? I really want to start a business, but I don't have the money. So I tell people, hey, there's many ways you can actually go out and get a business loan or a business line of credit. And then here comes the truth. Well, I thought about that, but I have a very low credit score. And I say, well, what's a very low credit score? They tell me their credit score. Then I say, okay, well, you need to work on it. And I teach them how to work on it. Now, if anybody knows me, I have credit letters to help you to remove credit inquiries and also bad credit accounts, to erase them and delete them off your credit report. That can essentially help you. Okay. Now, even though even though this is a very aggressive method, it has been very effective for a lot of people that I've sent it to over the past 3 or 4 years. I've been offering that long because I love to help people. There's no charge. There's people on the internet, all over the internet, have different versions of these letters because you go out and we pay lawyers to put these letters together, and they charge people $10, $20, $50 to get these letters in order for them to do it themselves. I'm like, you know what? I already paid the money. I could make money off of it, but I give them away for free. I've been doing it for the past 3 or 4 years. I don't care. I give people, I say, hey, the only thing you can do for me is subscribe to the channel, give me a like. You go and get the letters for free. I send in your email. If you guys want a copy of these letters, charged off, accounts that are in bad standing, and I'm gonna let you in on a secret. You're waiting? Okay. Now, you can actually use these letters for accounts that you know you made, but you did not sign for them. Meaning you called up and you got a line of credit or you got a credit card, but you know it's your account. That gray area that, you know, hey, this is on your conscience, this is on your morality and your ethnics, they still work for that as well. I know people who use my letters, say, hey, man, I know that was my account, but it was in collections. And I said, hey, it's not my account. They didn't have my signature. They couldn't find my signature. And that's what people don't understand. Companies need your signature and they delete them. And here's another one. You know, accounts that you had for a very long time. You're like, wait a minute, after 7 years, this account's supposed to fall off my credit report, but it never did. These letters will get that off your credit report as well. But we really, really need to understand the two differences of these credit scores. Okay. You have your Vantage score 4.0, and then you also have your FICO score. Okay. And again, the reason why I'm focused on FICO, because 90% of lenders use your FICO score. All right, let's see who's in the room tonight. We have Tanya Rivers. Well, thank you, Tanya Rivers. She said that's great advice. I do appreciate the kind comments. We got Mitch in the room from Alaska. Good evening, Mitch. And we have Miss One. She said, yep, it's about proving it. See, let me also tell you guys this. When you guys go on to these digital platforms and you say, oh, well, I'm just going to dispute it through the digital platform. That doesn't work. That doesn't work. You know why? When you do it digitally, you know, some people say, oh, doing it the old fashioned way is the best way. I can contest to that. For this particular thing, doing it the old fashioned way, sending a letter in the mail is the best way of deleting it from your report. When you do it digitally, you say, I'm gonna dispute. You do it on their websites, right? Very digitally. You know what those credit agencies do? They call them, they send them some sort of transmission email, however they contact them. They say, hey, they say Ray Rawls says this is not his account. That company says, yes, it is. The credit agency says, okay. that's what happens. But when you send in your letters, and these letters, again, was constructed by a lawyer, because here's the thing. When I give you these letters, okay, you have to get it notarized because it's a legal binding document that has certain language on them. So the credit agencies can say, hey, listen, this guy not playing around. I actually need proof of Ray Ross' account. I actually need to see what he signed. I need to see a binding contract. I need to see paperwork where he actually signed. More times than not, ladies and gentlemen, do you know most companies delete your file, especially when it goes into collection after 2 years? Because they need to free up storage space, cloud space, right? They have so many customers every year, every month. They have to free it up. They can't just keep growing the cloud. They say, well, we have all of these servers. I'm just giving you the technical part of it. We have all of these servers. We need to get rid of this. Well, those people who we charged off and sold their account, let's delete their files from our servers. So they don't have any record of it, because when when they go in research, when these three credit agencies go in research, say, hey, we need proof, they don't have it. So they delete it from your credit report. Let me show you something again. Let me help you guys out. I'm gonna help you guys out. Let me show you one more thing. And you're going to catch it. I'm gonna give you some good eye contact here. You know, I love talking to the people, right in their eyes. I don't like to shuck and jive. So I'm gonna tell you this. When you use these letters, whether it's for accounts that you know you had and they went in bad standing, or they just popped in your credit score, they can delete them, and your credit score, because if that was pulling down your credit score, when they delete it, your credit score will go up. I helped my fiance. I don't know exactly what her credit score, but she's raised her credit score 100 points in the last year. Think about that. If you could just hold on for a year, it's a possibility that you can raise your score 100 points. Because in a matter of 6 months, was this 9 years ago, in a matter of 6 months, you can go from 550 to, I'm not saying I did it, but they are my letters. I'm just saying. And I'm saying, and what that helped was, me and my fiance were living in a very nice house. If I didn't have a credit score like that, I doubt if we would have got a loan at a very low interest rate. And now we're refinancing. And this is what I love about my refinance. I've been in a house not even a year, and I'm already refinancing. In my opinion, that's a very good thing, because I haven't really built up any equity anyway. So now that I'm dropping down to a 2.25, I can really start building the equity, and I'm good. I don't refinance my house unless it's more than a point, more than a percentage. And since it's in the first, I didn't really build up the equity. I said, hey, we're not losing anything. Let's go ahead and refinance and save some money. Now, let's see. I'm just going to call you Roxy 11. It can work on some medical bills. Some, not all. I don't know the particular ones, but yes, it can. The only thing these letters, and I can tell you guys out there, I know you're about to cut off your computers and shut down your phone when I'm about to tell you this information. It's one thing that these letters cannot help you on. One thing. This one thing, nothing will help you. If you have a federal student loan, these credit letters cannot help you. Bankruptcy cannot help you. I believe it was Bush. I believe Bush came out with a law stating if you got a federal loan for school, doesn't matter what you do, you cannot get rid of that. You can what they call it, when you defer it. You can defer it, but you will always owe that money until you pay it off. If you have a federal student loan, you will always have that debt unless you pay it off or you die. You pay it off or you die. You can't, I'm gonna file bankruptcy, I'm gonna get rid of it. No, you still got it. I'm gonna use financial literacy 101 credit layers. No, it's still gonna be on there. You cannot get rid of them. I mean, it is what it is. You cannot get rid of it. Okay. So let me see what else you guys are saying. Now I'm gonna invite anyone. I just want to see if anybody wants to come join me, because I want to hear some stories. I want to hear one story of someone who got denied credit. And I just want you don't have to show your video. Just come in with your voice. I just want to know, how did that make you feel? Because I think a lot of times we hide from ourselves. The reason, someone told me this about a year ago, they said, your channel should have more than 100,000 subscribers. I said, I'll have to be on YouTube a very long time to get 100,000 subscribers. And they're like, well, why? People do not like to deal with their finances. It amazes me. It amazes me that people do not want to deal with their own finances. It's kind of like going in a closet and there's a boogeyman. I don't want to go in there. I don't want to look at my credit score. I don't want to see how much I have in savings. I don't want to work on it. If you don't work on these things, ladies and gentlemen, and you have some brash idea that one day you're going to be successful and wealthy and you're going to open up a business, you're not. So if I have somebody in the chat, if you want to click that link, and I just want to hear your story of how did it make you feel when you got denied credit on maybe a dream car, dream house, or even open up a business. That's all I really want to know, because I think we need to start liberating people through other people's story. Because some of you just sitting there, you're taking in the information, you're like, well, you know, I'll do it tomorrow. Okay, that's how your credit score going to look tomorrow. They're going to look at your 650. Yeah, we'll just give you a loan tomorrow. And it's very important, okay? And if you guys want these credit letters, in the link in the description of this video is my email. Simply request it. I'm not going to ask for any money. I'm not going to be marketing. I'm not going to be advertising. I'm just going to send you the letters. I'm going to give you instructions, and I'm going to send you the letters. That's it. Usually I send these letters within 72 hours of your request. Absolutely, positively free. Let's see here. Mitch says disabled veterans can get their student loans paid off completely. Mitch, if you mind, sir, can you come inside the chat and inform the people how disabled veterans can get their student loans paid off? I don't know if you saw the link within the chat. I'm going to put it up here one more time. And while you do that, Mitch, you can just join with your voice, okay? But I would love for you to explain that if you can. And we have Eric on here. He says, I recently turned 18 in December and wanted to know what are the best credit cards for starters. Well, you know, some people say that no credit is bad credit. In some instances, that's true. In other instances, that's absolutely false. Now, you can do an unsecured credit card or a credit card. In your case, I will probably start off being very, very safe with a secure credit card, meaning basically you send money to a company, you deposit into your account, right? They deposit into your account and you use your own money, but it's showing what a good steward you are of using your credit card. And that's a secure credit card, okay? Unsecured credit cards, just regular credit card where they give you 5, 10, 15 grand and you use it sparingly. But when you're using your own money, you have to pay off your own money. It's kind of weird, but it does help build your, it helps build your credit score. But if you can get a regular credit card, I can't teach anyone discipline. That's one thing I can't do. I can't give you discipline. The only thing I can tell you is make sure you don't go over 30% utilization of your credit card. Always make sure that you can pay off your credit card before the billing cycle. That will help your credit score stay high. Okay. So Mitch, I don't know if you're still in the room or not. Maybe he dropped off, but I want him to come in to explain how veterans can get their student loans paid off completely. Okay. That's all I wanted him to do. So maybe he left and I'm gonna move on. So ladies and gentlemen, again, I'm going to offer those letters out. Just give me an email request. Currently I'm in Rio, so I'm a couple of hours ahead of you guys. It's around, let me see here, because it's almost midnight here. After this, I'm calling my baby and I'm going to bed. But I had to give you this information. It was on my mind. It's one of the videos that I wanted to do. So if you guys have any questions, okay, any comments, leave them in the chat. I'll make sure that I read them and you get the information. And again, okay, here we go. We got Mitch in the room. Let me join Mitch in very quickly. Let's see here. What's going on, Mitch? Mitch, can you hear me? Mitch, you live. What's going on, brother?
Yes, I can hear that, Mr. Ross.
Oh, okay, sir. Can you explain to the people how veterans can essentially, disabled veterans can pay off their loans? Can you explain that to us?
Yes, if you are a 100% disabled veteran and you just go to your site, pull off your certificate that say you're a 100% disabled veteran, you go online to student loan debt forgiveness. This is one form that you have to fill out. Basic form information when you enter the Army, whatever service you did. You submit that with a copy of your phone of that certification, of that certificate saying that you are 100% disabled veteran. and they will remove that debt from you. They will send it out to the school. They remove that debt from your credit, from your that student loan.
Does it?
Done it.
Go ahead. I'm sorry. Finish. I'm sorry.
Yeah, I've done this a year and a half ago. That's why I left Afghanistan to come to get my 100%. So once I got my 100%, I had roughly $65,000 in student loans.
Wow.
Dealing with my bachelor's degree and my 2 masters. Once I turned in that, they paid $65,000 straight out of the because everything was tied up in the Oklahoma student program where everything is consolidated. Paid all $65,000 of my student loan.
Now, was this a federal loan, or was this a federal loan or a private school loan? Was it federal or like?
Yeah, it was a federal student loan.
Okay.
Some of it was federal and some was Georgia was federal and some of it was from private school, but they grabbed every student loan that I ever had and paid every one of them off.
Wow.
$65,000 paid in full.
Well, thank you, Mitch, for the information, brother. I do appreciate your time and information. Thank you.
Hey, no problem, Mr. Ross. Keep up the good work, brother.
Thank you. All right, ladies and gentlemen, you heard it from Mitch out of Alaska. He was stating how 100% disabled veterans can get their student loans paid off. They paid off 65 grand of his student loans. I did not know that. So if you guys if you are a 100% disabled veteran, or you have any family members who are 100% disabled veterans, they can get their student loan pay off. They just need the information that he stated. For you guys who are just joining, please rewind the video. A lot of good information about your FICO score, as well as your Advantage 4.0 score, and also how to delete and alleviate a lot of the charge off and collections off your credit score, off your credit report. This is Financial Literacy 101. Learn money and be inspired. You guys have a great evening. Take care of yourselves. I'm out.